All right. So let's talk about something else now. Okay. You have what's called reverse levels and reverse trends. This kind of falls in the same wheelhouse, the same umbrella of expectations, or what could be happening in a move, where something could go. We can't control what guy X wants to do if he's a millionaire or a billionaire, and you have a trend like this, and it breaks, and price moves up, or whatever the case may be. Actually, that wouldn't be the trend. It would be more like this right here to this right here. So that would lead you from this to this point right here, like so, which would adapt here on the 4, and anyways, and so forth, and then here on the hourly, right here on the hourly. Actually, that would be the 4, because that one would have been the 12. And then this would be the hourly, and then something like that, the 15, and then, and so forth and so forth. Anyways, reverse trends work a bit differently. They work on higher time frames, and not always on higher time frames, but typically on higher time frames, from the bottom of one move to the top of the next, right? So what would happen here is you would go from the bottom of this candle here to the top of the move up. And that can give you kind of a total eclipsing point for the future. So let's go to XBT and do this maybe a little differently here on XBT. So, XBT, we all know the trend from here to here, right? Which would give you the bottom of this to the top of this one, which would be actually starting from here. So that can be the eclipsing. Oh, sorry, right here. That can be kind of the eclipsing point of this move, the bottom of this trend to the top of this move. Accumulation, the distribution to accumulation, always accumulation on the top side, which originally would have been here and then here. These are max points that a trade could possibly go. So here, it could be here, 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 here. At this point here, you would be using a different trend, because you've already taken a move down. This would have been the kind of total eclipsing point right here. A reverse trend is just another spot where something can go when it's not defined by the bounds of a move. So, for example, in the future, if you were to move up past this point right here, the reverse trend is where it could possibly go. So you could possibly go something like this, for example. You could go like this, and then like this, and then like this, but then that would be kind of the final point, right? So that would be the kind of final point for a trade. Now, I don't typically use reverse trends, but you can. Like I see them used sometimes. SPX is a good one where a reverse trend was used. You can get rid of that. And I think it's the monthly it's used on this one, if memory serves me. Bottom of this to the top of this. So the bottom of the distribution to the top of the accumulation, right? And then that would have been moved to this point here, like that, giving you this point here. And then we don't have an accumulation candle. So this is the reverse trend. They're very simple. I don't teach them because they are rarely used. They're used to define the tops of moves when there's no other binding criteria that could possibly be there, right? So again, this falls into the same umbrella of assessing risk in a move, and what you're willing to do with a move, and the risk you're willing to assess on it, right? So bottom of the distribution to the top of the accumulation. So it would be here, adapt to here, which you can see that trend has followed pretty religiously there, probably coinciding with hold levels as well. But anyways, which moves to the top of this move right here, which gives you that criteria binding there, and then this here, which gives you that criteria binding there. Again, falls under the umbrella of whether or not you want to trade it, because it's not conventional. Something I don't frequently use, something I would very, very infrequently use on Bitcoin, unless I was trying to find I would use the most aggressive reverse trend to find some type of point that I would be looking at buying. I wonder if there's anything else. We could try, you know what? I've never tried this on Ethereum. Let's try this on Ethereum USDT. I'm sure Ethereum hit some kind of silly high. Maybe we need to go Ethereum USD. BitMEX, that's contract. So maybe just this, yeah, you actually don't have it here either. You wouldn't, because these are just too new in terms of, maybe you could have it on a weekly chart where you're bottom of this to the top of this candle here, right here. the binding criteria there. And there's nothing above that. And then in this one here, you'd be like this, the bottom of this, the top of this. But at this point, you've got your hold levels being respected. So you wouldn't be using these. So this is an example where you wouldn't be using these. Here, when there's no established base, you could use that right there. Bottom of this to the top of that gives you a criteria. And then if it were to continue to push up, it would go much past this. And then that would be the point where it would stop it there. Again, these are too new. Like, let's try Nike. Good chart on Nike. I'm not sure what it is. This is going to be almost the same as S&P 500 though. So, it is going to be almost identical. Go to the top of this and bottom of this right here. Right there, like that. And so it gives you its final binding criteria, right? Where it can go within the realm of what it has, because you can see it's right here, right? First candle there. It doesn't have a criteria it can break above. This is it, right? So now you're here, right? Like you're all within the same reverse trend here. So this is a distribution to accumulation. You're all within the same reverse trend. Again, these reverse trends are only to be used when you're reaching all-time highs, because there is no other binding criteria that you could use. So what's going to stop the move is a reverse trend. If there's a level, it'll stop it. A trend won't. Not like this. This is, again, you can't stress this enough, only used when you're pushing the high of some kind of price. Like Tezos, what is this? XZT? I've never even looked at this one. So what is this one called? XZ. What is Tezos? I know this one is relatively popular. Let's take a look at this. Like where? No. Okay. So what is this ticker? XTZ USD. So what would be the legacy coin for this one? Calculated by TradingView? Hit BTC maybe? No, not really. Because this has information there. So this is the crypto space is a little tough for this, because XCT USD maybe Kraken. So that goes 2018. This is 2019. No, that doesn't work. Okay, you know what? We will forget Tezos, because I'm not sure which ticker it would be, and this might actually be it. This might be that legacy. I just know this one's pretty popular. What about Link? Link was Binance original, I believe. So distribution to accumulation, you see? So distribution, you can't use this. It's too aggressive. This is just too aggressive. But you can use this one, and that does give you the binding. Let's zoom in, make sure we're snapped properly here. Here to there. That does give you the binding criteria of the top of where this move could go, right? And now you'd be like this. You could be here to here, right? Which gives you that bind, or you would be this to this, or this to this for the future. So, very simply, you'd have your original and your current, right? So this is a good example of where a move can go when it doesn't have that criteria. So you use a replayer tool, and come on, why can't we do the replayer on this? Okay, that's fine. We'll do it this way. You have this right here showing you where this could go. The total cusp of the move, which is probably pretty close here, 510. Down here at 26 cents. Where could this thing go? That's where it can top out at. And it actually does get relatively close to that. Can't go past it. It's as simple as that. Can't go past it. So this is a good example. Link. You can't do a 12-month, obviously, because there's no 12-month. It'd have to be like this to this, which wouldn't give you anything. I believe that was this one here. Yeah, it wouldn't give you anything. Just not enough time, right? This is why we can't use it in crypto, because there's not enough time. But it does give you kind of the bind on that side, which is an early way to create this on this side, right? Actually, you'd be right here, the first candle to this. Come on. Accumulation to accumulation. So it's kind of the first sign of this being developed in the future, which is a different, another reverse trend, which is just accumulation to accumulation on the other side. So Again, it's just to stress it one final time, and not a criteria I would use very often, but definitely something to be aware of, that there are these umbrellas of these different, all a part of risk assessment moves, right? And then also reverse level. So we're going to talk about that one now. XBT. Sure, XBT. Why not? Go back to here. Let's find the base of a move. It looks like this is the base of a move right here. There's no reverse levels in play there. A reverse level is any point. So this is something we've already kind of learned, but to put a label on it, a reverse level is any point that can ladder a move, right? So for example, you have ladder 1, 2, 3, 3, 4, 5, 6, 7, 8, 9, and so forth, right? That's fine. That's fine for now. We can delete the L. We don't need the L, and we're going to delete this. So it's just one stroke as well. 1, 2, 3, 4, 5, 6, 7, 8, 9. So in this move, you are going to have points that you ladder this move, right? So we're going to go to here. Take a look at this. Where can this ladder, right? Maybe we'll just break it down to 5-minute time frames, just because it's we don't want to go too overboard and do. This should be the second ladder point. Let's hit play. It's not, because this should have been the second ladder point in the moment. Is there a 1 minute here? There's no 1 minute. So there's actually no 1 minute time frame here. The 1 minute is down here. So technically the 2 should have been created on this level, but it's not. It's actually created right here. This is a point where a reverse level is used, right? Because this should be where it ladders. So let's go back to the time frame it was created on. I think it was a 5. It wasn't a 3, was it? It was a 5. So this should be the time frame it's created on, which it tries to create on this. And a reverse level is part of that range that is anywhere between the top of that to the bottom of that candle. So a reverse level can exist anywhere in here. So if you were to actually go in here and start looking at the bases of candles on different time frames, that's where you're going to find them. So there's one right there, right? This is any part of that range that's between this and that can technically still ladder the move. So that's important to understand. The brass tacks here is that if this was 2 on a smaller time frame and this is 3, but on a much larger time frame, this is the 2 and the 3 ladder can exist off of anything that will ladder this move. So if the ladder is 1, 2, this is the level, it can ladder it off of anything between that range. So it can ladder it off of the bottom of it, right? It's another form of deep diving, or it's how sometimes deep diving is established. It can ladder it off the bottom. It can ladder it off the hold level. Here it's the hold level. So I had marked it as this before, but it was just because I was misclicking it to the hold level. So this is a hold level on one time frame, but a reverse level on the other time frame. So now we're going to do this one here. So this was laddering maybe off of 15. Where is this? 15 is there. No, maybe it's a 5 minute. Backside 5? No. Higher valley, maybe? Let's find the level so that we can know where it's, no. So is the hourly here, maybe? No hourly. Do we just check the 5 minute? So we did that one. Which one were we looking at? I think it was this one, wasn't it? Yeah, the third ladder point. Okay. So that's fine. Right here. So the backside of the valley, right? So you've got either this or that, right? We can say it's this, that's fine. And then it should, deep dive down into the front side of this somewhere. So let's see what it does. So we've got ladder 1 and 2 accounted for. That's fine. Really, it should go down to here, should it not? Like our expectation would be here, which is all a part of also where your expected buys are, right? So it should be this one right here. This is the second ladder. 1 and 2 are accounted for. You're looking for the third ladder, which should be here, but that doesn't mean it can't be, for example, the backside of a smaller time frame. As long as it exists within this range, there's a reverse level in there somewhere. So something that will fall between the criteria that can establish the hold level. So kind of like what we talked about before, where you have maybe the greediest level doesn't get hit, which is 90-64. But then you have backside, front side combination. This would just be the reverse level of a ladder, right? So when you're looking at this, that this is hard to account for because you have to realize it can be anywhere between this range here, the top of this move, and the bottom of this move, right? So it can be anywhere between the greediest point at 90-64 to create the next piece of the ladder, the highest point here, which actually makes this 4 not even exist because this 4 actually turns into a 3 right here. And the 3 actually goes after the backside, front side, which can be any level inside of here. So a reverse level is anything inside of the range. It could be here, for example. It could be the backside of this. It could be here. The key thing about this is understanding that this is the new hold level, just like what we had talked about, where you're not necessarily going to the greediest level. You're going to the next hold that's getting created off of that. So as this were to be 1 right here, this will now be 2, which should have given you this, but it deep dives that, which makes your new ladder point here, 3, which gives you your next hold level there. Again, expectation of this should be hit while you've seen what's being held in the move. So now your new hold level is this. And it might have actually just been this right here. So if this continued to hold the move, that might have just been it, but it doesn't. It actually goes after the greedier part of its move, right? Which gives you 3, which gives you this is your 4, right here, which again, you'd expect the greediest part of the move to be here. It's not. It actually holds here. And then its next greediest entry is here, which actually also doesn't get hit. So now you're getting the trail of trying to find the greediest parts of the move. And look, you never actually get there, right? You're trying to find the greediest parts of the move. So it actually gets hit here. Again, going back to the previous, right? Right here, the 15-minute does get hit, right? So people would have missed that, which gives you your entry point inside of here somewhere before a large move up. So if you were to go to here and start with the 1 minute, you actually don't even get entry, do you? You get one entry on this move. Try to find it. Yeah, it's right here, the 3 minute backside. I wonder if it's a 5 minute actually. Kind of looks like a 5 minute. Yeah, 5 minute right there. So that 5 minute or that 3 minute, 5 minute combination gets held. And that gives you the ladder point. So yeah, again, a reverse level, to understand reverse levels, you first have to understand that ladders get developed off of different points and not just the greediest point. And then that point can be any reverse level between the range, right? So if your range is from here to here, it's not always going to go after the greediest level. If this were G, you have the backside, you have the greediest level here, which is also known as the front side. And then you have some kind of combination level, backside, front side, BF, backside, front side, best friend. Your backside, front side level, which this is the reverse levels exist in here. So identifying a reverse level is understanding that as long as it's laddering off of this greediest point, you then have to start to develop the architecture to see, oh, it actually laddered off this piece of the move, making this the next best entry. So your entry is here or here, as we saw walking through this. So a reverse level is the level that will hold the move. So we kind of went through this twice in a way, but now we're giving it a strict definition so that it's not just, oh, we've got, if it hits when you say it hit a reverse level, you should know and understand that it didn't go after the greediest level, but it laddered the move. So it's a combining of all things that we've talked about, which we broke it down in a simplistic way at the beginning of this lesson. But now we're giving it a name so that we understand. It's the level that gets hit prior to the greediest. So it's a little different. Let me delete these brush strokes and I'll demonstrate it. So for example, if this is the new greediest level, right? So this our expectation was down here, right? But then it creates the new greediest point. So if this was the greediest point right here, right? And that never gets there, this is the reverse level. So this right here is the reverse level. And then our new greediest point is developed off of the reverse level, which is here. So this is what we called earlier in this lesson, kind of the expected level, right? So the expected level that was hit, or this was the expected level that was hit. This is the new greediest point. This is the reverse level. So we're going to go expected level. So expected EL, fine. That we don't need to use that term. Well, you can if you want, but this is just what you expected to get hit. The level that was expected to get hit gives you the new greediest level, which is the new greediest point in the trade, which is right here. The reverse level gives you the greediest level right here. So when you have the new greediest point that gets hit, that's because a reverse level was hit. So the reverse level is the higher time frame hold that actually held the move, also typically known as a backside or a front side, but understanding it as a reverse level lets you understand that the next trade that's happening is the greediest point off of that reverse level. So the ladder from that reverse level to this, right? So a reverse level, again, is anything inside the range. You know, if you were to delete all of these and find another one, you'd be back down in this region. While it should technically hit this down here, never does. Should hit something like this down there, never does. Instead, what does it go after? This right here, I think. Seems about right. Let's take a look at the higher time frame. Yeah, it goes after that level, which gives you your next entry point right here, right? So this is the reverse level in the trade, or something that actually happens. Where's the hourly here? Hourly there. There, that hasn't been hit. It might be too far up in the move right now to see this. Let's try smaller time frames because I don't think you're going to be able to see it there. This is what was supposed to get hit. There's one. This is what's supposed to get hit, right? What actually gets hit, which is supposed to be this, but actually goes after this right here. Which gives you your greediest entry off of this. Right there, right? So this was supposed to be hit, and maybe we should even trail this back further. So this one is supposed to be hit, actually. We'll trail this back further because actually we misidentified it as the top. This, so now we have to go back to the 5, which gives you this here. So this is what was actually hit, which gives you the greediest point off of its hold level, right? So this right here should be the entry on the trade. That was never hit, right? So we can just delete that. This is the actual level that's hit, the backside there. And I wonder if there's anything on the smaller on the 3 minute. I don't think so, but I think it's the same level. It is. So that gives you the trade right here, right? So this would be the reverse level, and that's your entry right there. Breaks above it a bit, 91.61, breaks it above it before falling down. And the fall isn't that great, but that's, you know, fine. It's just an example for this. The fall isn't that big. I think it's like 50 points, 40 points.